So we're getting the unemployment rate, which is coming out here today. That's huge. And then we have the NFP, or non-farm employment change, non-farm payroll. This will tell us, excluding the farming industry, what employment change was like, how many jobs were added in the US economy. Last time around, we got 114,000 jobs added. And this time around, there's a lot of pressure here, because let me tell you why. The Fed is expected to cut interest rates this month for the first time. But people are trying to weigh whether or not this first rate cut is a victory rate cut, meaning things are all good and we're just going to start cutting rates because things are A-okay and things are just ready to start, the Fed funds rate is ready to come down normally and healthy. Or if we get bad jobs data today, meaning a higher than expected unemployment rate or less jobs added than were forecasted, if that starts to materialize, what that tells us is that maybe the labor market is in a bad spot and that the rate cuts are more of an emergency fix. It's like pulling the fire alarm as opposed to, something more soft and easy, right? So today is huge. NFP today is probably one of the biggest events, again, in terms of a job statistics number that I can think of in recent times. I have a small position long on gold as of about 10 or 11 days ago. I picked up a swing trade on gold right around this level, came all the way back, retested my entry, and then has been moving back towards the highs. What I'm looking for on gold today, I know a lot of gold traders out there watching gold today, is I'm looking for weak jobs data to potentially cause a spike up, but I want to see if it holds. So if weak jobs data comes out, gold probably takes out the highs, which would be good for my position. I'm not saying that's what I think is going to happen. That's what I think will happen if jobs data comes in light. If it comes in weak, right, people are going to rally into gold. Why? Because a weaker dollar usually is positive for gold, and a weak jobs market causes people to get scared. And as many of us will probably already know, people like to grab onto gold when they're scared. All right. What if jobs numbers come out strong? Well, then in my case, probably I'll just hold this position. And if it's really bad and it's really strong and things are very, very optimistic from here, then I'll probably take a loss on this position. And I am risking that happening. Some traders will say, Nick, why don't you just close out of your trade? Well, because I don't trade like that. I'm not a scalper. I'm not a day trader. I'm a swing trader. So I oftentimes do hold through news. Today, though, there is an opportunity for me to potentially look to add to my trade. So if we get something like this, big pop through the highs, I may actually look for a chance to add to my position here and stay long, but even add more size to my gold trade. I discussed this yesterday, but my gold trade is actually kind of small on my account. I have 200 shares of GLD, which is an ETF that tracks the price movement of gold. And so I'm up about $775 into NFP. I could give back some of that today. If it happens, it happens. But if we are able to see weak jobs data and rate cuts are more likely to come into the picture, then I am looking for a chance to potentially add to my gold position. Next up, though, I wanted to talk briefly just about the S&P 500 and the NASDAQ, which have started really sinking ahead of this jobs data with some of the weak other jobs data points that came out earlier this week. I'm talking about specifically job openings were weak out of the United States. We can take a look at that just really quick together, just so we're on the same page. Going into this, guys, we've been having some bad numbers. Job openings came in very weak during, I believe that was Wednesday that it came out. Wednesday came out very weak. You know what else came out weak this week? The private sector reporting 99,000 jobs compared to a forecast at 144. That's a huge miss. So a swing and a miss for jobs data so far this week. The question is jobs for NFP or NFP going to repeat last month's disappointing numbers again? And if anything tells us about if history tells us a lesson there, that would tell you that the stock market did not like that. The dollar index fell hard. The stock market fell hard. It's not necessarily what I'm saying I think is going to happen because I don't predict these things, right? I'm not here to predict what's going to happen with job statistics. Especially many of you guys are probably familiar that they revised those numbers heavily in the past few weeks anyways. So, the reported numbers these statistics are inevitably a very difficult thing. Employment is actually quite hard to track. We could go down that conversation another time when we have more moments to discuss it, but we have just about 5 minutes before NFP comes out. And I want to take a look at the dollar index going into this as well. You get the dollar index trending lower here. If you get a weak print today, I would not be surprised if the dollar index is taking out the lows and never even made it back to some of these pullback levels that I was looking for. But if you get a strong print for NFP, it would also not be surprising that we could see a takeout of this area and perhaps go a little bit higher. In that case, I may look to start to sell the dollar if we get up into the 50% retracement. Give it some room to kind of have a couple days of rallying, but that's a scenario for me as well.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
All right, so just a heads up, we will be, don't go anywhere after the spike. We got like 1,700 people watching. We're going to be doing commentary on why these numbers matter, how they actually impact the markets here, just after the numbers come out. So please don't go anywhere. I know a lot of people just watch the spike and then they run off, but we should be getting the numbers here in the next couple seconds. Let's see how NFP impacts the markets. All right, euro is lower, dollar index higher, NAS higher, SPX higher, US 30 higher. Gold is lower here on that print. Let's take a quick look and see what we've got in terms of numbers. Should be dropping. There we go. We had a less than expected non-farm payroll come out and 4.2% for unemployment rate. So unemployment rate did actually come down slightly, which is positive. You had higher than expected average hourly earnings, and NFP came in light. I would actually say that's not a particularly bullish report here for stocks. We got gold moving higher because that makes sense. You got a little bit of weakness in the jobs data, right? Gold is moving higher off of that. And at the same time, unemployment came in as expected, but noticeably alongside this, you got a little dose of inflation coming in, 0.4% as opposed to 0.3 for the average hourly earnings month over month. Remember that earnings are a huge contributor to inflation, right? If you get people getting big raises in this economy, inevitably what that means is that it becomes inflationary. And so everybody wants a raise. Don't get me wrong. I'm not saying anything bad about that. I would like a raise. We'd all like a raise. But as an economy, if everyone is getting raises, the tricky part there is that it causes inflationary concerns. And so at the same time, we've got a move lower in well, the dollar is now completely reversed. Look at that. You've got NAS down from the spike highs, SPX, US 30, all of them erased those moves and now just kind of sitting flat. And look at gold, guys. Are you kidding me? Look at that. Let's switch over to that and just take a quick look at gold. I am long gold, so I will take that this morning, no problem. Take a look, gold up. There we go. Very close to all-time highs, guys. We're on all-time high alert here for gold traders out there. I'm long as of August 22nd. I'd love to see this one continue. If we can see the break through this high, like a good push and close today, that would be a very good sign that we could be breaking out of this range that has held price stagnant for the last 20 or so days. It's been a very consolidating heavy number. But let's review these numbers one more time, guys. Let's first of all just get a quick updated reaction. NASDAQ didn't really actually move. It spiked up and then came back down. Dow Jones, same thing. You got the NAS, you got the S&P, both trading in the middle of their ranges today, but they've been moving lower this morning. You've got the Russell 2000 index. I'm feeling good about stopping out of my position for now. I could snap back the other way, but you got stocks moving lower here after the print. Let's review those numbers again and see what they tell us a little bit about this market. Why is gold moving higher? Oh my goodness. How did I miss this? Holy crap, guys. We got 114,000 last time, and that freaked the market out. Look what we got this time. We got 142,000 compared to the 164 forecasted. We reacted to that first, but did you miss the revisions? Do you guys see the revisions right here? Look at this. We were forecast last time we got 114,000 jobs and people freaked out about that. They just revised that number down to 89,000 jobs. Guys, we're not even in triple digits for numbers of added jobs last month. Oh my goodness. I'm actually surprised we're not seeing a bigger reaction to this. That is actually horrible. Dollar index is seeing the reaction. That makes a lot of sense. Look at the dollar falling down lower. Not only did you get bad numbers this month and bad numbers last month, they went back to last month's number and they said, actually, it was lower. It was lower by another 20,000 jobs. They revised the previous one down. They were expecting 164 this time, and they got 142. This is horrible. This is horrible numbers. And I got to say, jobs data coming in like this all week long, just bad numbers. Not to be a pessimist, but that seriously challenges the soft landing concept. In terms of gold, though, we're making nice moves. Very nice push to the upside. This one's making a lot of sense to me, and I mentioned earlier that I'd be looking to potentially add if we get a strong close today. So for me on this gold position, if we get a big close, let's say we close like up in this range, if we get a big, nice, strong green candle today, I'd be looking potentially next week for a chance to actually add to my position and try and let this one run. Let's take a look at the P&L on this one, GLD. So I'm in this long position. We're up $930 on this one. So we'll see if this one wants to break through the structure highs. I'll be looking for a chance to probably trail my stop in. I'm liking this on the 4-hour chart. This is giving me a potential higher low. If you get a nice closure today, I may look to actually finally trail that stop loss into profit, lock something in on this trade, and see if it wants to keep going. So very much a nice reaction on gold. Makes a lot of sense that gold would be higher today off of that statistics, as people might get a little bit worried about the labor market. Though, again, very surprising to me that we're not getting a bigger stock market move lower off of that data, which I guess sort of just confirms the news of this week. This week, we've had bad jobs data points, which have already dropped the market a good bit. But again, I also would not be surprised if we roll over further today. I definitely lean in the short term bearish on the markets. You've got September seasonality, which looks rough. What's your reaction to the NFP report this morning?
Yeah, I thought maybe the number was going to be quite positive, but I think it's not really that bad. It still shows a cool off actually in the job in the employment change, but it's not really bad as maybe we thought, because I can see the hourly earnings there. I mean, hourly earnings, it's much better. Unemployment rate, not really that bad. Even yesterday on the jobless claims, they were not really that bad. So I think that we will see the market starting to go a little bit up on the Nasdaq side. And I think now it's we can confidently say, yeah, I think they will cut the rates. I think some people, they start to say maybe 50 basis points. Mm-hmm. But I just believe that they will just cut the rates. I don't know what size are they going to use. But I think now things are much better, because we were all panicking. We thought maybe it was going to be like aggressively lower, or I just wanted it to be positive, but at least it was not really aggressively lower.
Sure. Well, Kenzo, I don't know if you saw they also revised the previous one. This was what made me a little bit nervous about it.
Yes.
Check this, look at this. So if we take a look at the revisions, they actually revised last month's, which caused a little bit of concern out there, was the 114,000 jobs added, caused the markets to go into a little bit of panic mode, and they actually revised that number down to 89,000. We did see 142 compared to 164 expected. So I think at least on the jobs added front, it was a little bit rough. The point that you're making, though, is worth mentioning, that 4.2% not coming in higher. We previously saw 4.3. It is a good sign that we didn't see that one jump up to like 4.3 or 0.4. If we saw 4.3 or 4.4, that would have been just horrendous, right? So we're seeing less jobs added, which is a bit concerning. We see wage growth going up on a month-over-month basis, which, inflation's not really the key concern anymore. But that's kind of a lesser point. But you have this number, which is okay. And then you have this number, which I would say was not good. So you're kind of getting a mixed report. One thing I was making the point of earlier, Kenzo, was this number on paper for me I would have expected the market to actually dip lower. But the thing is, maybe because we've already had a couple of days of heavy selling going into this, and the jobs data this week has been pretty poor, perhaps the bad news has already kind of been muted a little bit from the earlier reports this week. Do you think that makes sense?
Yes, you're right. Actually, the market already priced to that. It's like everyone was expecting the lower numbers, and already the market did sell. I don't think we still have that room for the market to sell, even though it seems like we have some other structures that might look like support. But I think the market already priced to any bad scenario. But now, when we check NFP, I can say it seems to be balancing actually each other out, because we have the other number which is negative, or let's say lower, and the other one did not really change, which means the employers are not really firing much, and actually they are not really hiring that much, but the hourly earnings or wages, they are actually going a little bit higher. So which means there is a balance. It's not like maybe the over hiring or maybe firing. So it means we are moving on a very balanced line, which is good. That's why maybe we will see maybe dollar index also trying to reverse, even if it's not going to reverse aggressively, but it might reverse. But it might be a different thing on gold. Gold might actually get confused and might just consolidate actually.
Yeah, I was going to ask you next about the dollar index. So dollar index has been trending lower for a few weeks here, really struggling to find any consistent buying, right? So you're seeing there was this couple days up of green here, but the retracements have been very weak for some time here. I'm curious your thoughts on that. So do you think that the dollar index has a chance of potentially bottoming around 100.5? You think, maybe this chart has gotten a little extended to the downside? Are you looking for longs, or are you more looking for shorts from here?
Yeah, I think with the balanced number from NFP, I think we're gonna see a nice reversal, even if maybe it's not really aggressive reversal, but you can see that we don't really have a quite bearish structure from NFP, which means even if maybe the market might still be on a downtrend, it will be maybe because we expect the rate cuts coming. I think that is going to be obvious, but I don't think the numbers from NFP has a bad effect. That's why you can see it's now reversing very quick. Maybe it will reach this resistance, or maybe just to consolidate, but the overall structure, it is still on a bearish momentum, which is fine. But what we don't really want, we don't just want a meltdown. We want it to go smoothly. That will be fine. But if the market melts, that is the problem. But at the moment, I feel like things are not looking as bad. Yeah, on my side, I think the market already did touch this support area. Maybe now the market might just play around. Even if maybe to reverse, that to me it's fine, because it shows that the dollar or the currency is not really that weaker, you see.
Sure. Yeah, and Kenzo, you mentioned it earlier about the Fed funds rate cut that is expected to happen later this week. I pulled up the watch tool here just for us to reference. Yesterday, this was looking like a 45 to 55% chance that we would see the higher probability being the 25 basis point cut. So this is the 25 basis points, and this is the 50. Yesterday, we were looking at a 45% chance. We've bumped that slightly higher up to a 50% chance. So maybe that's why we're not seeing a ginormous reaction to NFP here, simply because this has shifted, but only mildly. We got a lot of weak labor data here this week. ADP, JOLTS job openings, mostly unimpressive this week for the jobs market. But the question now becomes, was NFP enough to really sway that vote further? And it doesn't seem like it made a huge difference. It did make some difference, but it more just reconfirmed what we saw this week, which was the jobs data is showing signs of really weakening. And it's very possible now that the Fed could cut 50 basis points. But I want to get your thoughts on something too. If the Fed cuts by 50 basis points, personally, I'd be a little bit worried. I would actually say that a 50 basis point cut could be a little bit worrisome, could be a little bit concerning, whereas a 25 basis point cut would indicate that the Fed feels okay. Would you agree with that? Or do you think a 50 basis point cut could also be okay and bullish? What do you think?
Yeah, at the moment, I think it's a bit confusing, but I can say I believe that they will go with 25 basis points. The thing is, next week, I think we're going to have CPI. Let's hope it's not going to go crazy lower because that can also trigger like fear in the market. But at the moment, it's fine because the most important one was NFP. But if CPI and retail sales, because they're going to come before interest rates cuts, if they go aggressively lower, that is going to also create another panic. And that will end up being like that. That's why I see 50-50 there. It's like now we don't really know which one they can choose. I think they can choose whether 50 basis points or 25, and it will make sense because everything is just cooling off very quick. So I think at the moment on my side, I feel like Federal Reserve, they are actually late this time. I think they were supposed to cut actually last month. If they did cut with 25 basis points maybe last month, I think we were not going to be in this panic mode at the moment.
Interesting. Yeah, no, that's a really interesting take, because then it makes the, that's been a I saw in the meeting minutes that they had actually mentioned that some committee members felt that they should have cut in July. And so very interesting to see that. And then, you've got a couple weeks here to go before they make the decision as to whether they're going to cut now. I think that this jobs data that we've seen this week makes a pretty good case for a possibility of 50. But other areas of the economy, like you still have GDP growth that looks pretty good. PMIs, came in decently well for services this week. Manufacturing was weak again, but there's enough there that maybe the Fed feels that they can get away with 25, but it's actually coming down to the meeting. It feels like it doesn't feel like we have a clear picture. I would have said a week ago, 25 basis points for sure seems pretty likely, but with this week's labor data coming in so soft, I'm not so sure. Now I'm feeling pretty undecisive about what I think will happen. I think that if CPI comes in very low, it's possible that we see something more aggressive. But I don't know. We'll have to see. It's a very interesting thing. What other charts are you looking at right now in the markets? Are you looking at any currency pairs? You got any gold trades open? What are you watching?
Yes, I was looking at gold also. I was expecting to see a nice reversal, but it seems like at the moment it's still struggling. But I like the fact that it's struggling to break my resistance there. So I will wait and see. Maybe once the market opens, maybe we will see a reversal. But the overall structure, it's actually a nice bullish move. So if the market is on the support area, I will definitely look for that buy or maybe around this level. But I don't really think we will reach this area. Another ones were just my currency pairs and Nasdaq and US30. US30 seems to be struggling a little bit. But at the end of the day, we had an area that I think maybe the market will be pushing up, because when I check, US30 was not really affected by Nvidia earnings that much, so it seems like it might reverse also. But on top there, we also have a major resistance. But since we're gonna have some rate cuts coming, whether 25 or 50, I still believe that we will see some very new highs. Another one, it's just currency pairs like GBP. We had a nice buy, but just because the market is now aggressively reaching the resistance there, we had to get out. But I still believe that we are still on a bullish move. But the overall moves here, I think coming from September, let's say September, October, November, towards elections in the US, I think that is going to be, the market is going to be volatile until they elect the president, and before that is going to be crazy. Besides interest rates, I think we're going to have a rough market.
Yeah, no, I tend to agree with you. And you've seen a bounce back recently on the volatility index coming down a little bit here today, which would be expected simply because, now that NFP is out, the volatility is going to, retract simply because volatility had the most potential energy, if you will. Volatility is an interesting thing. Once big events pass us, usually volatility drops because people are like pricing in, okay, the volatility is behind us. So volatility index up to, at one point again jumped up to 23. So during the major volatility that we saw last month, we saw the VIX go absolutely crazy. Has come down a lot since then, but we'll have to keep an eye. NASDAQ flat on the day here. SPX, same thing. Russell is just slightly lower. Dow Jones about flat as well. And as you mentioned, gold sitting right back at resistance. I'm very curious. I have a long position on gold. I was looking to see if we can break through the highs, but we've been struggling at this point here for a few weeks, actually. So we'll have to keep an eye to see if gold can, in fact, make a decision here. Is it going to roll over completely, or is it going to actually break through the highs? But kind of a muted response here in terms of the NFP report. Dollar index shot lower, shot high. Well, actually, it shot higher, then it shot lower, and has now come back into kind of where it started. So, bit of a wild NFP candle overall, Kenzo. I think we'll have to watch to see how the rest of the day closes, because if you get something, let's say the dollar index closes towards the lows after the market kind of consolidates and thinks about all the data that came in, that would be very curious. Or if it sees a full-on reversal, that also could perhaps mark a short-term low for the dollar index as well. So I'm curious to see how the dollar closes on a daily chart level.
Yeah, on my side, I still believe that even if it tries to consolidate here and there, I still believe that we are still going to see a weaker dollar index, because whether the NFP was average or whatever, but I think as long as we know that we're going to have rate cuts, I don't think that actually takes the strength of the dollar, because by cutting the rates, it means we're trying to cool off the strength. So it means slowly it will start to go even lower, but mostly dollar index is not really different from gold. Mostly they don't really react they don't really react immediately. They will react those days when they cut the rates, or during those days where there are those events. It's like gold. You see on that resistance that you say it's been holding for a week. It won't react much on the news, but during that day it might go crazy, because everyone at the moment is focusing on NFP and stuff. But during those days, they will react directly to those economic events.
Well, and you also mentioned something else, Kenzo, I thought was interesting, is the market is sort of sitting at these levels, but we already saw a lot of the move for this jobs data play out this week. So what happened this week was we saw weak JOLTS numbers, then we saw weak ADP numbers. This jobs data kind of happened all in slow motion. Like one day after the next, we saw the bad news coming out, and then NFP kind of just confirmed all of those suspicions. It would have had a more violent reversal, I think, if the data had come in good, because it would have been a big surprise. But the data coming in bad today, it was kind of expected to be bad simply because the bad data came in all week. So it was like it would have been very shocking if NFP itself just came in amazing when everything else was kind of a weak print this week. So maybe a little bit of a, maybe most of the move for the week has happened already, but we'll see. Depends how candles close. And as you just mentioned, sometimes you get the delayed effect, and maybe that delay is in fact the New York Open here, or the New York stock market open, which happens in about 20 minutes. So stock traders will be getting to the desk, and that comes with that is a lot of volatility, and a lot of market volume as well picks up during that session, especially on the indices. So we'll have to see how that goes.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.